In this video, we're going to be reviewing some of the financial statement and closing entry exercises from Chapter 6. We'll start with Exercise 1, where we are going to use the worksheet to complete an income statement. So obviously, we're going to use the income statement column to pull our figures from for the income statement. We'll begin with the heading Revenue, and our revenue is called advising fees. Okay, so the advising fees total was $41.40 according to the worksheet. Now we will list all the expenses here in the income statement column. We have wages expense, advertising expense, rent expense, supplies expense, phone, electricity, insurance, gas and oil, depreciation, and miscellaneous. And we can just pull the figures right off the worksheet. Okay, once we have them entered, we'll just add them all up and enter the total expenses directly under the revenue figure, and the worksheet even adds it up for you, so that should be $19.20. And to get the net income, we simply subtract the expenses from the revenue, and we'll get a net income of $22.20. Next, we'll go and complete the statement of owner's equity. Now, we don't have a statement of owner's equity column, but we can use the figures here to complete the statement of owner's equity. Okay, the first thing we're going to do is start with the beginning capital. So we will enter Ed Major Capital January 1st, and this is where you have to stop and think a minute. We can't just pull this figure because there might have been an investment over the period. So we are going to look for some information that lets us know whether there was an investment or not. It says here that assuming no additional investment was made by the owner. Okay, so we can simply go ahead and enter the $4,100 because we know there was not an additional investment. The two left-hand columns, remember, are what causes the investment to change, and that is the net income for the period, and it's already calculated for me right here, the $22.20. I could also get that from the income statement that we just completed. The next figure that affects the capital is the owner's drawing. How much did the owner take out of the business for his personal use for the month? And that's going to be given here on the balance sheet side. So that was $900. So the company brought in $22.20 and the owner drew out $900. So if we net those out, we're going to have an increase in our capital. So $900 from $22.20 is $13.20. So we will add that to the $4,100. So now the owner's capital at the end of the period, or the owner's investment, is $54.20. Now, probably the most changed financial statement in this chapter is the balance sheet, because it's the classified balance sheet now. where we're classifying our assets and liabilities as to whether they're short-term or long-term. We're going to begin with our current assets here. Notice that we've got two more headings under the assets. We have current assets and property, plant, and equipment. To find the current assets, I'm going to go up to our worksheet, start with cash, and work down until I hit a piece of a fixed asset or a piece of equipment, furniture, something like that that's long term. So I know that cash, accounts receivable, supplies, and prepaid insurance are going to be my current assets. Okay, cash, accounts receivable, supplies, and prepaid insurance. And according to the worksheet, in the balance sheet column, I'm going to take these figures and bring them down to the balance sheet. When I add those up, I get total current assets of $3420. Next, we're going to enter the property, plant, and equipment, and that means that any asset that is going to last for more than an accounting period. So this office equipment we're going to use in the future over several years. So office equipment and its accumulated depreciation is going to go under property, plant, and equipment. The office equipment was $3,500 and the accumulated depreciation was $200. To get the book value, and that's what we're carrying, that's the value that we're carrying the equipment on our books at, is $3,500 minus the $200. And so that will give us a $3,300 book value. I'm going to check my work just to see if they want a negative in there or not. No, the positive number was fine. So now I'm going to add the value of the current assets and the book value of the property, plant, and equipment. And that'll give me the total assets. Now liabilities will be broken down into current liabilities and long-term. We don't have any long-term liabilities, which are those that would come due in more than a year, but we do have some current liabilities up here, and they are accounts payable and wages payable. So accounts payable, wages payable, and those figures were $1,300. So the current liabilities total $1,300. Now I'm going to pull my capital figure, and this would be from the statement of owner's equity that we did earlier, but you know, there it is right there. If this were not here, I could easily figure up what my figure would be. I would take the $4,100, add the net income of $2,220, and then subtract the drawing of $900 to get $5,420. If you are working on an assignment, like on your exam, and you can't figure out how to get that number, just plug it in, because you know whatever that figure is has to equal 6720 when added to 1300, because these have to equal. So sometimes you can just work around it and plug the figure in and make the two numbers balance out. This little tip there. Okay, now let's go down to 6.5. 6.4 I've already done a video for, so we'll do 6.5, which covers closing entries, and we're going to be pulling our figures for the closing entries from T accounts. Okay, and if you remember, our closing entry, the little mnemonic is REND, revenues, expenses, net income, drawing. So that's how we're going to close out the temporary accounts for the accounting period. So I'm going to first find my revenue because that's the first closing entry. And here's my golf instruction fees. I have a $4,000 credit, and I need to zero that out. So to zero it out, I am going to debit that account for $4,000. In your first two closing entries, the offsetting account is going to be income summary. So if I debit my golf instruction fees, then I'm going to credit income summary. Okay, so that, when posted to the general ledger, will zero out the revenue account golf instruction fees. Next, we're going to close out all the expenses. So we have insurance, wages, postage, advertising, gas and oil, travel, and miscellaneous. Okay, so all of those have debit balances, so to close those out, we need to credit them. So I'm going to just go ahead and put my offset account here, and when I get the total for my expenses, then I will enter it here. But I'm now going to start entering the expenses here. Wages, advertising, travel, supplies, insurance, postage, expense, and miscellaneous. Okay, now notice that this is insurance expense. Prepaid insurance is an asset and it's not closed out. That balance carries forward to the next year. So all of these will be expense accounts. All right, they have normal debits, so they have to be credited to close out. And so our balances are given here. And I'm just going to enter them here on the credit side. Okay, I'm going to now add these up, and I'll get 2480. So this entry will close out all the expense accounts. Now what I have left in income summary, I have a credit of 4,000 and a debit of 2480. If I subtract those two, I'm getting a balance of 1520 in my income summary account, and that represents a net income. So what we're going to do is close income summary now to capital. If revenues are 4,000 and expenses equal 2480, then my net income is 1520, and I know it's an income and not a loss because the 4,000 in revenues is higher than my expenses. So net income increases capital, so I'm going to credit my capital for 1520. Income summary has a credit balance of 1520 in it, so in this third entry I'm zeroing out the net income with a debit of 1520. Okay, so income summary opened up here, it closed out here, or I'm sorry, our expenses were entered here, and then it was closed out here in this third entry. So after this entry, income summary should be 0. The last entry is D. So we've done the R, close the revenues, close the expenses, close the net income. Remember, this figure is not capital, it's the net income. That's why I have the N there in the mnemonic. And then D, close the drawing. So drawing is sitting up here with a debit of 1,000. To close that, I'm going to credit it. So I'm going to close it directly to capital because income summary is no more. It got closed out here. Okay, and now we'll just post these, and once we post them, it will demonstrate what happens to the income summary account, what happens to the capital account, and of course what happens to revenues and expenses. So first we're going to close the golf instruction fees. We're going to post that to close the account, and then we're going to post the income summary credit. So let's find the golf instruction fees. We have a 4,000 debit and a 4,000 credit, which takes that to 0. And then income summary gets credited for 4,000. So that's account 313 and then account 401. Next we have income summary debited for 2480 and then all the expense accounts credited. So I will just go through and credit all of the expense accounts to close those. Did I? Yes, it's 800. And now all the expense accounts will be taken to 0. Okay, so the debit, remember, was to income summary for 2480. Okay, now the third, we better put the posting references in. Remember, posting references serve two purposes. It tells where the account was posted, and it also shows that it has been posted. So there's no question as to whether it was taken over to the general ledger accounts or not. Okay, now we'll post this third entry to close income summary. So we've debited income summary for 1520 and credited capital. So we'll go to income summary and put in 1520. So when I add these two together, they equal 4,000. So I have 4,000 on the debit side, 4,000 on the credit, so income summary is 0. And the capital account is going to get a credit of 1520. And we'll enter the posting references. And now we'll close the drawing account. Drawing will get a credit and capital will get a debit of 1,000. All right, now let's take a look and see what happens to capital. It should be updated to what is shown on the statement of owner's equity. So that would be 10,520 minus 1,000. So our balance will be 9,520. And that will be the owner's ending capital balance. All right, so remember the 4 closing entries. You're going to definitely have to do this on your exam, and make sure that you look in Blackboard in the Chapter 6 folder above the exam. It will tell you which assignments you need to practice to be prepared for the exam. So the 4 entries are R, E, and D. Close revenues, close expenses, close the net income to capital, and then close drawing to capital.